Hello viewers, so welcome to my channel. I'm Hasham. In this video, I am going to explain you about the tax rebate under section 87A and what are the different rates or types of tax rates, flat rate, slab rate, then what are the tax rate applicable on STCG and LTCG. Lastly, procedure of computing the tax liability of an individual. In the last video, I have explained you all the classification of incomes. Incomes can be classified into casual income, special income, normal income. Remember, this theory is very important. I got one message from the students that they want the problems directly. Sorry, I cannot be able to explain the problem directly without understanding the provisions of IT Act. So these are the foundation for solving the problem. And I suggest you, while watching this video, always keep a notebook, pen, calculator ready. Note it down the important points, important provisions. Then only you can be able to solve the problem with confidence. Otherwise, the subject of income tax will appear to be very tough for you. So always follow my instruction. It is for your benefit only, I am saying. So before explaining the content of this video, take the screenshot of the points which I have written on the board. Then I'll explain. Now, first of all, tax rebate under section 87A. In examination, you may get a theory question, explain about the tax rebate, or in problems, the tax rebate will be allowed as a deduction only on satisfying the conditions. So, you must know what are the conditions, when the tax rebate will be allowed, how much tax rebate will be allowed, to whom the tax rebate will be allowed. That's what I'm going to explain. The tax rebate means concession in tax payment. Concession or reduction in tax payment is called tax rebate. The tax rebate is allowed to lower income groups. Everybody will not get the tax rebate. The tax rebate will be allowed only to lower income groups. Who are called the lower income groups? I'll explain you in the condition. Now list the following two amounts as tax rebate. How much tax rebate we can get? A person whose income is low, he will get the tax rebate to the least of the following two amounts. Actual income tax or fixed limit of 12,500, whichever is less. Example, if the actual income tax happens to be 20,000. So actual income tax is getting 20,000, whereas fixed amount is 12,500, whichever is least, 12,500 will be allowed as deduction. Similarly, if the actual income tax is only 5,000, 5,000 is the actual income tax, whereas the fixed amount is 12,500, whichever is least, 5,000 is least, so 5,000 will be allowed as deduction. So, least of the following two, actual income tax or fixed amount given by the Income Tax Act 12,500, whichever is least is allowed as tax rebate under section 87A. Now, conditions to claim the tax rebate. On what condition this tax rebate will be allowed? It is not allowed to everyone. These three conditions. First one, the assessee is an individual. The tax rebate will not be allowed to HUF, to firm, to company or any other person. It is allowed only to the individuals. Secondly, the residential status during the previous year is resident. That means tax rebate will not be allowed to non-resident. It will be allowed only to resident. Thirdly, total income is up to 5 lakh. The total income is up to 5 lakh. Then only tax rebate will be allowed. If the total income is more than 5 lakh, tax rebate is not allowed. So that's why this tax rebate is given only to lower income group whose total income does not exceed 5 lakh. Up to 5 lakh rupees, tax rebate will be allowed. That's all. That's why non-senior citizen and a senior citizen will get tax rebate, may get the tax rebate, whereas super senior citizen will not get the tax rebate because the basic exemption limit itself is up to 5 lakh. That's why they will not get a tax rebate, super senior. Now, tax rebate is not allowed on casual income. Remember, the tax rebate is not at all allowed from casual income. It is allowed only from special incomes and normal incomes. Now, rebate will be given before charging any cess. The tax rebate will be deducted before charging the health and education cess. These are the points you have to remember for writing the theory of tax rebate, and this concept of tax rebate will be applied in problems. You have to see if the conditions are satisfied, then you have to give the tax rebate. Now, types of tax rates. Income tax has classified the tax rate into two types: flat rate and slab rate. First of all, we'll discuss about flat rate. Under this method, the entire income is taxed with one rate. The complete entire income is taxed with a single rate, that is called flat rate. The following are the incomes, example of incomes where flat rate will be applied. What are the example? First one, casual income. Already in the last video I have explained in detail what is casual income, examples of casual income and tax rate on casual income. Remember again, casual income is taxed at a flat rate of 30% separately. It will not be clubbed with any other income. Then STCG, short-term capital gain arising on account of transfer of equity shares or units of equity-oriented funds of mutual fund. This wording you have to remember, because these are the provision of the Act. You cannot write in your own words. So STCG, short-term capital gain arising on transfer of equity shares or units of equity-oriented funds of mutual fund, is taxed at a flat rate of 15%. 15% is the tax rate. Next, LTCG on other assets is taxed at a flat rate of 20%. LTCG on other assets are taxed at a flat rate of 20%. Transactions of undisclosed income or investment or assets are taxed at a flat rate of 60% without giving any deduction. Remember, undisclosed income. If a person has not disclosed his income, not disclosed his investments, or not disclosed his assets properly, then income tax will charge 60% of tax on that income, on that investment or that asset without giving any deduction. Flat rate of 60%. So these are few examples where flat rate of tax will be applied. Remember, these are very important. Note it down. These rates we are going to apply in the problems in the coming videos. In all the above cases, SSC has to pay surcharge and health education cess. After calculating the flat rate of tax, they have to add as usual surcharge and health and education cess. That's all. Note, LTCG, long-term capital gain on transfer of equity shares and units of equity-oriented funds of mutual funds, is taxed at the rate of 10% without indexation after 1 lakh rupees, in excess of 1 lakh rupees. That means up to 1 lakh rupees LTCG, long-term capital gain on transfer of shares. STCG, here I have shown short-term capital gain on arising of transfer of equity shares and units of equity-oriented mutual fund is taxed at flat 15%. So same thing, if short-term capital gain is there, it is taxed at 15%. If the same case, long-term capital gain is there, it is exempted up to 1 lakh rupees. Up to 1 lakh rupees LTCG will be exempted. Over 1 lakh rupees, it is taxed at a flat rate of 10% without indexation. That you have to remember. Now, short-term capital gain. What are the different rates of tax on short-term capital gain? That's what I am explaining. In the previous video, I have explained you short-term capital gain means any gain arising on the transfer of short-term capital asset. Short-term capital asset is that asset which is held for a period of 3 years or less. Below 3 years. Below 3 years, if an SSC hold the asset and then sold it, it is called short-term. Now, short-term capital gain on equity shares and equity-oriented units of mutual fund is if STT is paid. STT stands for Security Transaction Tax. This security transaction tax is the tax paid to exchange authorities when the shares are sold or bought in a stock exchange. Whenever the securities are bought and sold in a stock exchange, the buyer and seller have to pay STT, security transaction tax. So if short-term capital gain on equity shares on equity-oriented units of mutual fund, if STT is paid, then taxed at a flat rate of 15%. Remember the rate. 15% is the rate on on short-term capital gain arising on transfer of equity shares and equity-oriented units of mutual fund if STT is paid. Remember, if STT is paid. Now, if STT is not paid, 20%. So, STT paid 15%, STT not paid 20%. Now, short-term capital gain on debt-oriented units of mutual fund taxed at a flat rate of 20%. The same. If the short-term capital gain on debt-oriented units of mutual fund. In mutual fund, we have different types of units. Equity-oriented, debt-oriented. If debt-oriented units are there, then short-term capital gain is taxed at a flat rate of 20%. STCG on other assets taxed on slab rates along with other incomes. Remember, excluding this STCG, if STCG is there on any other asset, flat rate will not apply. Slab system will apply. That STCG will be included along with other incomes like income from salary, income from house property, income from other sources. In all those other incomes, this income will also be added, STCG on other assets. Very important point. Now, STT, security transaction tax, is payable at the time of purchase and sale of security to the stock exchange authorities. Just now I told you. Now, long-term capital gain, LTCG. Now here, LTCG we have divided into two categories. LTCG on equity shares and equity-oriented units of UTI is exempted up to rupees 1 lakh. The excess of 1 lakh is taxable at a rate of 10% without indexation. Secondly, LTCG on any other asset is taxed at a flat rate of 20%. These two rates you have to remember for LTCG. That's all. Now the last topic in this video is regarding what is the procedure of computing the tax liability of an individual. What are the steps required, procedure in which the tax liability will be computed. The first step, determination of residential status. A person's residential status has to be determined first during the previous year, because it may change. A person will not remain always resident. A person may not remain always non-resident. It may change every year depending on number of days stay in India during the previous year. How many days he stayed on the land of India during the previous year. That will give you residential status. The first thing, we have to find out what is the residential status. Secondly, classification of income under other different heads. Income Tax Act has given the provision that tax will be computed under different heads. The different heads are 5. Income from salary, income from house property, profits and gains of business and profession, capital gain and other sources. So we have to find out what are the different sources of income this assessee is having. Next, computing income under each head of income, that is income from salary, income from house property. After finding out what are the different sources of income, we have to compute the income under each head. How much is the income from salary? How much is the income from house property? How much is the income from business and profession? Like that, individually, separately, we have to compute the income under each head. Clubbing of income of my spouse, minor child, etc. Income Tax Act has given the provision. Sometimes the income of the spouse will be included in the income of the assessee. That is aggregation of income, clubbing of income. In the coming video, I will explain. Secondly, minor child. If there is an income in the hands of minor child or a lunatic person, then the income of the lunatic person or minor child will be included in the income of the SSC if it is there. Then next one, set off or carry forward and set off of losses. There is a provision regarding set off or carry forward of losses. If a person has incurred a loss in the last year, the current year income, we can set off the loss of the last year. Income Tax Act has given the provision that any previous year losses are there, those losses can be set off from the current year if it is there. Next, aggregate all the incomes computed on different heads. The total of all the heads is called GTI. After computing the individual incomes under each head, we add up all the individual heads of income to get the gross total income, GTI. Then deduct deductions from GTI under section 80C to 80U. A number of deductions are allowed under Income Tax Act after finding out GTI. Deduct all deductions from 80C to 80U. Then application of rates of tax on total income. We don't have a single rate of tax. We have different rates of tax applicable on the nature of income. Like there's a flat rate of tax on LTCG or STCG. Similarly, slab rates are there on normal income. So we have to apply different rates of income on different rates of tax on different incomes. Next, calculating income tax or tax payable. Once we have decided the rates of tax, apply the rates of tax on the income, you will get the tax liability. Next, deduct tax rebate is if applicable. Just now I have explained you about tax rebate. Low income groups. If a person total income is up to 5 lakh rupees, tax rebate will be allowed. If the income is more than 5 lakh rupees, no tax rebate will be allowed. So we have to check whether tax rebate is allowed or not. Add surcharge payable. Then if the SSC is applicable surcharge, then add up surcharge. Surcharge is a tax on tax. Only for higher income group people, surcharge will be applied. So who are the higher income group? The people whose income is more than 50 lakh during the current previous year. During the last current previous year, he has earned more than 50 lakh rupees, then surcharge is applicable. Different rates of surcharge are there. From 50 lakh to 1 crore, 1 crore to 2 crore, 2 crore to 5 crore, over 5 crore. The 4 different rates of surcharge are there. If the income is below 50 lakh, no surcharge is applicable. Then add health and education cess. So after adding surcharge, if any, on that total, you have to calculate health and education cess at the rate of 4%. Then deduct the TDS and advance tax paid. If already the SSC has paid the advance tax or TDS, that will be deducted from tax liability. Then we'll get finding the tax payable or refund. If still tax is due, so how much is the still tax due? Or if refund is, SSC will get the refund, finding out the refund from the income tax department. This is the procedure of computing the tax liability and tax due for an individual. So in this video, I have explained you about the tax rebate under section 87A and what are the different types of tax rates, flat rate and slab rates. Slab rates I have already explained slab rates are already explained in the last video. Normal income. On normal income, slab rates will be applied. Like for non-senior citizen, up to 2,50,000 nil. From 2,50,000, 1 to 5 lakh, it is 5%. From 5 lakh, 1 to 10 lakh, it is 20%. Over 10 lakh, it is 30% for non-senior. For senior citizen, up to 3 lakh, nil, no tax. 3 lakh, 1 to 5 lakh, 5%. 5 lakh, 1 to 10 lakh, 20%. Over 10 lakh, 30%. Lastly, for super senior citizen, up to 5 lakh, nil. 5 lakh, 1 to 10 lakh, 20%. Over 10 lakh, 30%. These are the slab rates applicable to different types of SSCs. That's all. So inshallah, we'll continue our discussion in the next video. If you're satisfied, give a like to the video. Share my channel among your groups, among your friend circles, so that more students can watch the video and enhance the knowledge. Give your comments on these videos And lastly, subscribe if you have not yet subscribed my channel. By the super thanks which is given below my video, inshallah we will continue the next topic in the next video.